Hello guys, welcome back to my YouTube channel. In the book 5 Moving Average Signals That Beat Buy and Hold, the author explores various moving average-based trading strategies to determine if they can outperform a simple buy and hold strategy in the stock market. The book primarily focuses on the S&P 500 index as a benchmark for comparison and backtests 5 different moving average strategies using daily stock price data. Below is a summary of the key points and findings from the book. 1 200-day moving average strategy. The author starts with the widely popular 200-day moving average. In this strategy, traders enter long positions when the price crosses above the 200-day moving average and hold them until the end of the month. If the price closes below the moving average at month end, they exit the position. This strategy achieved remarkable returns and significantly reduced drawdowns compared to buy and hold over the study period, 2000 to 2016. The 250-day moving average strategy. This strategy uses the 250-day moving average. Traders enter long positions when the price crosses and closes above the 250-day moving average. They exit if the price closes below the moving average at the end of any trading day. While this strategy offered slightly higher returns than buy and hold, it still reduced drawdowns. 3. Moving average crossover strategies. The book introduces moving average crossover strategies, including the 50-day and 200-day crossover, the 20-day and 200-day crossover, and the 50-day and 100-day crossover. These strategies signal traders to buy when the shorter-term moving average crosses above the longer-term moving average and to sell when the reverse crossover occurs. Each crossover strategy outperformed buy and hold in terms of returns and drawdown reduction. For performance during the 2020 pandemic crash, the book assesses how each moving average strategy reacted to the 2020 pandemic crash. While buy and hold saw significant drawdowns during the crash, the moving average strategies, particularly the 200-day moving average, proved more resilient with much lower drawdowns. 5. Conclusion. Author's analysis demonstrates that systematic moving average-based strategies can potentially outperform a simple buy and hold approach. These strategies aim to keep investors in uptrends and get them out before strong downtrends, helping to reduce risk and enhance returns. The 200-day moving average strategy stands out as particularly effective in achieving these objectives. In summary, the book provides evidence that moving average-based strategies can be valuable tools for investors and traders seeking to time their entries and exits in the market, offering the potential for higher returns and lower drawdowns compared to a passive buy and hold strategy. Please subscribe to my channel and like this video if you enjoy it.